Welcome, everybody. Steven Sitkowski here. This is my Market Insights, where we take a look at some of the highlights of what's going on that is moving the financial markets, maybe some thoughts on some things that you may want to consider currently or moving forward. Hope all of you had a great weekend. Yeah, I had a 2-day class that I taught Friday and Saturday, and Sunday was visited by a puppy that we're going to be puppy sitting to see how it get along with Charlie. And Charlie's our 14-month-old Cavapoo. And basically, I think they fell in love. The littler one was jumping all over the bigger one, and that was just a whole bunch of fun to watch. So we get them for 4 days coming up. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So, what's moving the markets? Well, the markets are lower today after a record setting week. I think this is to be expected for a handful of reasons, not the least of which the markets just got a little ahead of their skis in the face of a whole lot of headwinds. But ever since the ceasefire, market's gone higher, higher, higher. And then at some point, you're going to get a pullback. There's going to be some profit taking, there's going to be some selling. And that's exactly what happened. Now, the market was down fairly considerably today. We'll take a look at the intraday chart, and it closed not in bad shape. So, well, we'll pull that up on a chart and take a look. Trump's visit to China, I don't know, from my perspective, was kind of unremarkable. What was I hoping for? I was hoping that the Chinese would agree to cooperate with the United States and getting something done with Iran. And instead, um, Trump today threatened to bomb them tomorrow because Iran is kind of not doing anything or not doing anything he wants them to do. And apparently, they called him and said, "Hey, don't bomb us tomorrow." He said, "Okay." And on that news that got reported, the market started recovering. But I think we got to admit tensions remain high, and who knows what tomorrow's headline is going to bring. Um, I don't have any better intel on that than any of you. It all looks like a circus. I hope that we get some resolution for all of the right reasons, right? Humanity, lives saved, and then for selfish reasons, we stop spending money over there. I think our bill is like 29 billion. Um, Oil prices through the roof. So because oil prices are through the roof, it's driving up the interest rates across the board. The 10-year Treasury has pierced that 4.5 level that I told you about. And ever since it's done that, we've had 2 down days. Now, my fear is, can it go above 4.5, or excuse me, 5%? If the 10-year goes above 5%, I'm flat telling you that you're going to see a pullback in the market at 10%. Hopefully, it doesn't get to that. We're a long way away, but we could conceivably get there if we don't do something about oil prices. West Texas Intermediate is now trading at $106.89 a barrel. Now, I read somewhere that given the state of events, that oil should be at like 130. But because what's happening is not considered permanent, basically it's a discount. Well, some discount. When you go to fill your gas tanks, I hope you made a bunch of money on oil stocks. You certainly should have. Market breadth for last week. So the two things that I like to look at Advancers versus decliners, that wasn't too good, right? And then we look at new highs versus new lows. So on the New York Stock Exchange, 285 new highs, 214 new lows. That's not so bad. On the NASDAQ, 745 new highs, 521 new lows. Also, you know, not too bad, but not nearly as bullish as we've seen it previously. And the winners are from last week. Dexcom was up 6.5%. Fact data, 6%. Workdays up. ServiceNow. I'll have something interesting to show you on ServiceNow in a little bit. Apache, Occidental, Devon Energy. Um, so we didn't have any of the 15, 20% moves last week, but certainly some solid moves. Here's last week's heat map. So as you kind of look at it, it looks to me like a decent balance between red and green, maybe a little more in the red, but you see some bright green, right? Some big winners, energy, duh. Lilly had a good week, AbbVie, NVIDIA, good week, Cisco, Texas Instrument, Apple. Percentage of stocks trading above their 50-day moving average. I'll take a look at the trend on this, rolling over. It always happens, gang. Look, up, 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 and rolled over. Right now, we're at about 50% of stocks trading above their 50-day, which is about normal. It's not bullish, but it's not bearish. It's about normal. I don't like the trend, so we'll see if it can kind of hold these levels, and I'll report back on that next week. It's definitely a stock picker's market. Percentage of the S&P 500 stocks that have outperformed the S&P 500 for the last 3 months, 24%. Here's the deal. There has been a crap ton of money to be made if, and only if, you're in the right stock. 75% of the stocks really haven't moved the needle. So, I talk to people that say, yeah, I'm in the stock market. I understand the stock market's going up. How come I'm not making money? You're in the wrong stocks. Not everybody knows how to select stocks appropriately. Strong revenue growth. I mean, look at this trend. Is that a thing of beauty? So, the first quarter of 2026, revenues up over 11%. That's fantastic. Now, where is that coming from? Predominantly tech. So tech is up um, almost 30%. Why should most of your capital be invested in tech and AI related stocks? It's where all the money is right now. Now, at some point, that'll dry up and it'll get overvalued. But how can you consider something overvalued when revenues and earnings are growing the way that they are? Speaking of earnings, so these are earnings beats on a percentage basis in green. Again, what was the big winner? Technology. Where do you want most of your invested capital? Technology. It's beating on the top line and it's beating on the bottom line. A relatively new trend. This is interesting. So I'm just going to use Alphabet, formerly Google. They have invested $107 billion in the stock of other companies. Microsoft is doing this, NVIDIA, is doing this. So basically, when you buy stock in Alphabet, not only are you getting shares of Alphabet's business, but also the performance on the stocks that they've purchased for their corporate account. It's kind of fascinating, isn't it? I don't spend a lot of time thinking about this, but I need to spend more time thinking about it. And these guys, they get to cherry pick. They understand these companies are investing in better than you and I ever will, right? Because they're in related businesses and know how those businesses are trending. So when you hear about Nvidia invest 200 billion in whatever, pay attention to that. That's how some people are going to end up with shares indirectly of SpaceX. When SpaceX goes public, I think it's going to be way overpriced. But some of these companies that got in at the earlier stages, they're going to do great. Tech is now 55% of all US capital spending. The money spent in technology is 55% of GDP. That's insane. I mean, look at it. In 1960, it was 15%. Now it's 55%. And this may surprise you a little bit. Memory has taken center stage. It's now ahead of AI chips. So if you want to know where's the net income, memory, like Samsung, SanDisk, Micron Technology, it's 453% year over year growth. AI chips, 95%. I mean, that's still huge, but it's one fourth. Actually, it's about 20%. We live in different times, and these things are accelerating, and they're building a momentum of their own. AI will continue, and AI related stocks to dominate in 2027. AI infrastructure stocks, earnings per shares estimated to go up 32%. The S&P, 8%. Huge differential. Manufacturing's been making a big comeback. I don't know if you saw the Empire manufacturing number, that's manufacturing in New York. It was up huge, but general business conditions are on the uptick. That's a beautiful thing. So I thought I'd share this with you. Trump is taking a position, I'll pull this up on a chart, in ServiceNow. So it has appeared, you know, 8 different times, beginning in January of this year. So one of these purchases was between $1 million and $5 million. Personally, I don't think elected public officials should be able to invest in the stock market unless it's in a blind pool that they don't see and have no and have zero control over. But I don't know if Trump's buying a bunch of service now, might be worth considering. Market sentiment hasn't really changed a whole lot in the last few weeks. April 29th, 38% bullish over the next 6 months. May 6th, 38%. May 13th, 39%. The bearishness has gone from 39 to 33 up to 36. So we got a little more bearish, slightly more bullish, but bulls versus bears, it's almost a push. Fear greed index, we're still in the greed category, but lower. A week ago, we were at 65. Now we're at 62. A month ago, we were at 68. Now we're at 62. A year ago, we were at 70. I think I told you we're at 62. The future of interest rates. Basically, it looks like interest rates are going to head higher. I mean, that's how it's looking, at least as of now. And they're supposed to be higher as of, I don't know, maybe December this year or January of next year. Chances of a rate cut over here basically been taken off the table. Stock market likes lower interest rates, but with elevated oil prices, we're not going to get them. Sector performance year to date. So the S&P is up about 8%. Of that, energy is up 34% for obvious reasons. Tech up 15%, growth in earnings. Communication services, 12%. Staples, 12%. Materials, 10. Industrials, 10. And the only ones that are negative, financials and healthcare, they keep jockeying. Remember that old TV show, The Biggest Loser? Yeah, they're both down around 6%. I'm not sure what's going to bring healthcare back. I think financials will make a comeback. This week's earnings. Tomorrow we have Home Depot. That tells us a lot about the consumer. Wednesday, we have NVIDIA, TJ Maxx, Analog Devices, Lowe's, Intuit, Synopsys, Target, and Copart. And then on Thursday, these are all the biggies: Walmart, Deere, and Take-Two Interactive. Which ones are capable of moving the market? Well, number one's got to be NVIDIA. Terms of news of the week. Um, most all the news that potentially could move markets will happen later in the week. We will get the Fed's minutes coming out on May 20th. Might there be something said that could hint that, you know, we're going to be, that the Fed's going to be a little more dovish than we're all expecting? That'd be great. On Thursday, we get initial jobless claims. Then we get our services and manufacturing purchasing managers index coming out. So that's somewhat telling. Friday, we get consumer sentiment and leading economic indicators. So we've got the earnings announcement for NVIDIA on Wednesday, and then watch the data points for Thursday and Friday. It's kind of where it's all happening. Let's take a look at the charts, see what they've got to say. All right. Let's look at the SPX. Boy, it got about back to zero. Hmm. This has a little bit of a delay, this being that chart. Let me look at real time. Yeah, closed down 0.07. NASDAQ 0.81. So it got obviously hit a little harder. So, we got far away from this 50-day moving average. And I told you when that occurs, you generally will get some kind of a pullback, and that's what's happened. But, this is a news-driven market. So any announcement, good or bad, about Iran could be a market mover. Take a look at the intraday, and you gotta love, I mean, down, 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 down. Then okay, we won't bomb you, right? Market shoots up, kind of comes back down to the moving average, and then higher, higher, higher. And it gets almost back to zero. That's very encouraging, given all of the news items. And what about the VIX? So I thought this was interesting. Generally, When the market goes down, the VIX goes up. Well, today the market was down and the VIX was down 3.5%. So what that tells you is investors just aren't all that scared. At least they're not today. All right. Been great being with you once again. And I will see you all same time next week. Until then, be safe, be blessed. Bye for now.